Good morning, everybody. My name is Barry Sloan. I'm President and CEO of Newtek Business Services. We're a Nasdaq publicly traded company, stock symbol NEWT. Our retail brand in the marketplace is known as the Small Business Authority. Some of the vital statistics on Newtek Business Services, which has been a publicly traded company for over 12 years now. In 2011, we produced revenues of approximately $125 million. That was up 11% over the year prior. We generated after-tax net income of $3.5 million, which was 10 cents a share. Stock is currently trading at approximately $1.43 on 36 million shares outstanding. We've got about $59 million in shareholder equity, and we're trading at a market cap of approximately $51 million, which is at a discount to book. The company's primary mission is to be a thought leader and destination for independent business owners all across the United States, using the SBA, Small Business Administration's definition of independent and small businesses across the U.S., which are businesses typically under 500 employees, under 25 million in sales. There's currently 27 million businesses in the United States that are defined as small. 9 out of 10 businesses in the U.S. fit that definition, and the small business market represents approximately 70% of net new job growth. So this is an extremely important demographic in the marketplace today. When you look at Newtek Business Services, you're basically looking at a company where we position ourselves as the place where small businesses shop. Walmart is where America shops. Newtek Business Services is where the small business owner shops. The things that we provide to small and medium-sized businesses all across the United States are SBA lending, receivable financing, electronic payment processing, e-commerce solutions, all forms of web services, web design, web hosting, domain name registration. We are a one-stop shop for small and medium-sized businesses. Looking at some of our financial highlights for 2011, I will also tell you a report on May 5th for the first quarter, but I recently reported fiscal year 2011 highlights. As we talked about, net income of $3.5 million, up from $1.4 million. On a pre-tax basis, it was $2.3 million, up from $877,000. We've also given guidance for 2012, and we're looking at revenues of approximately $132 million, and we have a midpoint pre-tax net income guidance for 2012 of approximately $6 million, and that's up from the $2.3 million. Looking at the company at large, we've got a lot of our businesses broken out into segments. You can see that in our K's and Q's. We have segment reporting in our small business lending division, in our managed technology solutions division, and in our electronic payment processing division, which is giving businesses the ability to take all forms of electronic payments. Our small business finance segment, as reported in 2011, posted pre-tax net income of $4.1 million for fiscal year 2011. That was versus $2 million from a year prior, a 102% increase. Revenue also increased to $21 million from $9.4 million. Obviously, I think you're all aware of the capital crunch that the United States is still experiencing. We are a non-bank lender. We're non-depository. This is a very important segment for us and for businesses all across the United States. It's an extremely hot sector for us. Our loan loss reserves and our performance criteria speak for itself. This is a business to keep an eye on. It's going to continue to grow in a very, very nice way. Some other highlights relative to the expense side. You know, in a market that's really hard to grow revenues, what we try to do is pay close attention to the expense side of the ledger. We've been able to reduce our costs with real estate in New York. Last year, we incurred a $1 million charge, a non-cash charge, as we subletted some Manhattan space, reduced it in size, and swapped it out for some Hempstead, Long Island space. This particular change, although it resulted in a charge in 2011, will reduce our cash flows and improve our cash flows, I should say, and reduce our annual rent expense of approximately $625,000 for about 3 years. We also, in the first quarter of this year, relocated one of our facilities in Arizona. We have 2 facilities, a military strength level 4 data center. We also have a facility that houses approximately 100 staff members to service our customers in the technology space. We've improved our cash flows over the course of 3 years by about $545,000 a year. We also moved in Wisconsin in the first quarter. That's where we have our merchant processing and electronic payment processing group. We have about 70 employees there. A much smaller reduction of about 50,000, but we picked up much more manageable and more new space. Further looking at the segments, the electronic payment processing group, $82.5 million of revenues, up 2%. The up 2% is a little bit misleading. For those of you that are familiar with the electronic payment processing space and the credit card business, the Durbin legislation has made some unusual changes. The Durbin legislation actually, which has put a cap on interchange fees for the card issuers, sort of affects an item that is effectively a pass-through. So if you took Durbin out of the equation, our electronic payment processing space is probably growing by about 10% a year. Our managed technology solutions was flat. Our small business lending revenues were up 124%. If you look at the pre-tax income ledger, as I said, our EPP space up 13%. That's clearly our biggest business from a revenue and bottom line perspective at this point in time. Cash position of the company, $25 million in cash and cash equivalents. Talked about developments in the payment processing space. This is a great business. It's fully built out. There's really no capital required for this business. This business was built organically, not through acquisitions. I think you'll find most of our businesses in Newtek Business Services were built organically. We have very little leverage, which we'll go into. We're cash flow positive. We've got a strong shareholder net worth. This particular business is extremely attractive. If you look at some other companies and some comparables, entities like First Data Resources, HPY, Heartland Payment Systems, and Global Payment Systems, there's some publicly traded comparisons. This is a very, very hot space in the capital markets today. In the managed technology solution space, we are currently going through a little bit of a change here. Our revenues and bottom line growth have flattened out. There are some challenges to us in this particular space. But when you look at Newtek Business Services, the Small Business Authority as a whole, the types of solutions that we provide to business owners, e-commerce solutions, lending solutions. We have a 50-state licensed insurance agency. We are a payroll provider. Our Managed Technology Solutions division will be our hosting company to host all forms of business applications to small businesses. For those of you that are following trends in the markets, particularly with respect to small business, business owners are going to be managing their business from tablets and iPhones, and they're going to want all their business applications hosted in the cloud. We are a very unique company in that we are the provider of these different solutions, both from a flesh and blood perspective, where we pick up the phone and answer calls, as well as from a software perspective. So if a business owner is processing payments with us today, using our gateway, hosting their website, we're going to be able to deliver to their iPhone or iPad real-time data with respect to Visa, Master, Discover, American Express statistics, and web traffic statistics. That's very valuable, and there isn't a player in the market that can do that today. Same thing for payroll, same thing for insurance. We're going to be able to deliver business owners real-time data and real-time information available on their iPad and on their iPhone on a regular basis. So this particular business enterprise, which is an operating business that we've owned, since 2005 in Phoenix, Arizona. All of our data is in a military strength proof level 4 facility. We're PCI compliant. We are SAS 70 compliant. Our alliance partners are entities like Morgan Stanley, 400 contracted credit unions, New York Community Bank, and many others. They have totally researched us, and hopefully I haven't put the kiss of death on the company so we don't get hacked into. But we run a real tight ship, and we've done a great job with respect to security and keeping our clients' data safe and secured. One of our business growing segments, obviously, is our small business finance segment. As we talked about, our revenue is up about 124%, or $11.1 million with 2010 comparisons. We came up with a $4.1 million pre-tax net income, 102% increase. Some of our lending products, we offer a small business term loan to business owners, 7 to 25-year amortization. I think it's important to stress this, and when we go through our presentation, a lot of people look at the company and they think that we're a broker or that we're an intermediary or that we don't provide the funds. We are the provider of all of these business services. It's not a lending tree model. So when someone does business with the Small Business Authority, they can be assured of a certain level of customer service, of a certain expertise, obviously, in providing them the best pricing, the best service, and the best technological application. We're not brokering loans and trying to find a lender. We are the lender. We've been in the small business lending space since 2003. We have an extremely strong lending infrastructure that originates, underwrites, funds, and services. Our front end is virtual. We don't have brokers or salespeople running around the country. The business is driven to us primarily from alliance relationships that don't want to make small business loans or don't want to provide electronic payment processing or don't want to design a website or don't want to provide health and benefits insurance or property and casualty insurance for a 2-employee company or a 10-employee company because they haven't figured out how to do it cost effectively. We can do that cost effectively. We have over 100,000 business accounts in our portfolio across many different segments. I should mention that we have a contract with the FDIC. We've had that contract in excess for 2 years. We go in on the front end with the FDIC as they're closing down financial institutions, and we service government-guaranteed obligations for them. And we've had that contract for over 2 years. As you could see, and as we report, our servicing portfolio for ourselves and others is growing. We're servicing now in excess of $500 million worth of loans, and I think you'll see growth in that segment going forward. Obviously, a servicing portfolio has reoccurring revenue streams. We've also done 2 securitizations in the market of small business loans. With that, we went into Standard & Poor's and got a rating as a commercial small balance servicer or an S&P AA rated servicer. Here's some statistics on our servicing portfolio. As I mentioned, we are now in excess of $500 million. You can see the growth in this particular segment of the market. For those of you that have attended RedChip conferences for many years, one of the businesses that we're in historically was a business where we participated in state subsidized tax credit legislation known as Capco, a certified capital company. This business, we ceased to create new enterprises in 2005. There's obviously a tail associated with this business. We still have on our balance sheet approximately $17 million in tax credits in lieu of cash and about $17 million in notes payable and credits in lieu of cash. These offset each other. They're both non-cash items. The Capco business historically has been a bit of a drag on management time. There's been accounting costs and other miscellaneous costs. You could see the trend of this business is declining. I think about 3-4 years ago, this business was about $70 million on each side. So this business has reduced its balance sheet effect. It's reduced its income statement effect. And as this business continues to atrophy, it'll reduce its cash operating cost effects. If you take a look at our balance sheet and the trends, we reduced our total asset size by a little over $30 million. I've outlined some of the changes that caused that reduction. That will continue to come down over time. You can see we've got a very strong equity base with very little asset size leverage. Most of that leverage is basically loans that are sitting against our leverage lines, and we are not a very highly levered company. We have approximately $40 million of that $72 million sitting in securitizations, where the loans basically pay off the debt. You've also got loans against our Capital One bank facility, and our uninsured loans are sitting at a 50% financing rate versus value, so you could see not highly levered also. We have a factoring business. We've got about $10 million receivables against $5 million of debt. There's about $10 million of accounts receivables versus accounts payable. So if you actually subtract a lot of these different items, we've really only got about $2 million of debt, which for a company that finances itself, and last year we did in excess of $100 million of loans to small businesses, it's a pretty good situation. One of our up-and-coming products is payroll. We have entered this particular space because it's a core operating function for small businesses, and Paychex, ADP, and Ceridian, which occupy about 85% of the market, fortunately really don't have a competitive product today. Their system is pretty reliant upon an expensive distributing front end. A lot of the legacy customers on their book of business have got many products and services that they don't particularly need. We guarantee that we're 20% cheaper than Paychex or ADP. We've got a software solution that is real time, so a business can go online, make changes on the fly, and the changes show up right on the computer screen in front of them as they're making them. And as I mentioned, I think probably in the third or fourth quarter of this year, we'll be rolling out payroll in the cloud, so business owners can actually make their payroll changes from an iPhone or an iPad. When you look at the company and our interest in growing, we're obviously looking to grow our business through the Small Business Authority brand. Our website is thesba.com. I welcome you all to take a look at it. We clearly emphasize cross-selling and cross-marketing into the in excess of 100,000 customer base. We have, since January of 2011, emphasized a direct focus on small businesses through our television and radio campaign that's somewhat new. And we will be rolling out this year our presence as a business service provider with all of our business applications currently hosted in the cloud. We are a cloud computing and solutions provider today, and we're selling quite a few of those applications. But importantly, all of our products and services that we're talking about will be available on an iPad. One of the ways that we do our business is we talked about our front end, going away from feet on the street distribution and bricks and mortar, is the use of our referral system, alliance partners, and our direct channel. We grew our total referrals in 2011 versus 2010 by approximately 15%. So what does that mean? It means that in 2011, 26,719 customers came to us, had their hand raised, and said, I'm interested in a small business loan, I'm interested in a website, I'm interested in a hosting solution, I'm interested in electronic payments, I'm interested in workman's comp, I'm interested in storing data. It could be one of those products or it could be several of those products. Here's some further data which basically shows you how our site is growing in terms of total visitors, unique visitors, and traffic. Our traffic increased 4.5 times with the thesba.com brand and site, which was rolled out in January of 2011, versus what we did on the Newtek site in January of 2010. We're picking up about 1,000 unique visitors a day to our site. Average time on the site about 2.5 minutes. Got a 61% bounce rate, and our Alexa traffic ranking is the 77,000th trafficked site in the U.S. In addition to our marketing strategy and our branding strategy, the Small Business Authority puts out a blog that can be found on blogs.forbes.com. Usually once or twice a week we put out an interesting article. We've got quite a bit of a following on that. We've also began publishing the SB Authority Small Business Index. You can come to our website and learn more about it. The Small Business Index is now published by Bloomberg and CNBC on a monthly basis. And we also publish a market sentiment survey. The market sentiment survey, we poll in excess of 1,000 business owners every month that are calling into us for customer service or acquiring products. These two particular pieces of market data are available to our clients on our newsletter. We send out about 55,000 newsletters a month. They're also available on Bloomberg and CNBC, and they're also available on our website. For those of you that are 770 WABC listeners and possibly watching Imus in the morning on Fox Business News, when Bernard McGurk or Warner Wolf does the sports, they report live from the Small Business Authority studios on 77 WABC. We produce about 256 60-second radio commercials per month. Some of these spots you can listen to on our website. So people like Hannity, Levin, Imus, et cetera, broadcast our spots. And we have 440 studio mention rights a month coming from WABC. Probably beginning July of this year, we're going to take our marketing on a national basis. Obviously, 770 is primarily Northeast, 77 WABC. And what comes on Fox Business News obviously is national, but we're going to put out a lot more branding dollars on a national basis. In conclusion, these are some of the trends of our business. It's obviously one of my favorite charts. We've given out public guidance, which I'll point to in a second. The midpoint of our guidance for 2012 is $6 million pre-tax, so it's a real nice trend. We're developing some significant benefits, and for a company that is not highly leveraged, we think there's significant growth opportunity. I don't think there's a person in the room that can argue the importance of the small business market and the small business segment. We've invested a lot of dollars into our business down through the years to develop several different servicing manufacturing plants to be able to provide vital business services to the small and medium-sized business market. This 2012 segment guidance is in the market. You can find it on our website. We do have quarterly calls. We will have one on May the 8th. And you can see the way we segment our businesses out. The electronic payment processing segment is our largest business. You can see that we're estimating on a consolidated basis about $12 million of modified EBITDA. If you roll that over to our market cap, we're trading somewhere around 4 times that. If you take a look at our pre-tax net income, you got $5 million on the low end of the band, $7 million on the high, midpoint of 6. Stay tuned for some updates in our first quarter call. Our managed technology solutions business, that is our business that's predominantly focused on hosting sites, providing outsourced technology solutions and cloud computing. Our small business finance segment is all of our lending businesses, our term SBA 7A product, our receivables business, and our merchant cash advance business. All other are some smaller business segments, things like insurance and payroll tend to fit into that box. Corporate activities is our overhead, and our Capco business is our legacy segment. Most of the expense, however, is, as you can see, it's pretty flat and it's non-cash oriented, and you got the total consolidated in the end. And that's all for our presentation today, and I appreciate everybody meeting and the opportunity to have some questions.
Yeah, what's the
Website is thesba.com. We call it thesba.com or thesba.com.
Just a small point. How do you keep it separate from the Small Business Administration website, which also stands for SBA?
I don't know.
I don't know.
I'm not confused. I'm not a government agency.
Okay.
I'm not .org. I'm thesba.com. I own the trademark. I own the domain name.
Okay.
And by the way, I'm an SBA lender, largest SBA lender in the United States. So we work very closely with the SBA, and they happen to like us.
On small business financing, you said you have a $500 million portfolio.
Of servicing, yes.
Of servicing.
Yes.
Who takes the credit risk in that portfolio?
Okay. The SBA program is a program where it's basically a co-law share, and 75% of those loans are government guaranteed. So on a pro rata basis, we take typically 25% of those loans we have credit risk on. However, our loans, our performing loans, are on our books as of 2011 at an 11-point discount. So we have mark-to-market accounting. I would like you to find a financial institution in the United States that has their performing loans marked on their books at 89. And mine are floating rate loans, and I've got 8 years worth of history, and we use mark-to-market accounting.
What is your non-performing loan loss ratio?
Typically, we are underwriting to a loan loss ratio that I'm going to use the word is conservative, but you can back into it on the discount. So we don't report that, but if you figured out the discount, you could estimate it. Is that fair?
Yes. And how do you compete against banks like Chase, which is a very strong small business services bank for agents?
Well, given that my J.P. Morgan Chase banker is here, I'm going to be extremely nice to them. And the way that we compete is we are known as an enterprise that is fully set up and serviced for small and medium-sized businesses in all 50 states. So by positioning ourselves as a small business authority and the ability to handle their payroll, their benefits, their insurance, their merchant services, and to do so on a collaborative basis. So all of our divisions actually work together in a collaborative basis. We're able to take a total account view of the customer. They get plenty of business, and we get plenty of business. Sure. Any other questions? Thank you.